I'm Max Keiser, and this is the Keiser Report. Yes, the global credit crunch continues. The global collapse of various economies continues unabated. What we saw beginning in 2007, gathering speed in 2008, then we had a bit of a reprieve in 2009, is now continuing with greater and greater devastating consequences in 2010. Let's get all the headlines updated with us right now, Stacy Herbert.
Well, first, Max, I want to go through a few predictions that have suddenly come true that, we made these predictions. First, the IMF gold for sale has apparently been bought by China. They've confirmed they're going to buy it.
Well, Stacy, on this very show 2 weeks ago, and for the last 6 months, I've been begging China to buy more gold bullion. I predicted that the 200 million tons, I'm sorry, was it million tons? No.
191.3 tons.
Right. That gold position was going to be bought by China after India bought their gold.
Yes.
And because it makes sense, given the fact that America will never pay China back the $1 trillion or so they owe them. So unless they want to lose that money completely, they need to buy more gold bullion.
Yes, it makes sense in a global deflationary collapse and sovereign debt defaults that we're now seeing. Now, the next prediction we made is when the Volcker rule was announced in the U.S. that it would not actually happen. So here's the headline, overruled. Yes, Treasury quietly letting Volcker rule slip would have banned banks from hazardous trades. And now we said this would never happen because, in fact, according to the WTO Financial Services Agreement that the U.S. is signatory to, any country signed on to the WTO is not allowed to re-regulate their financial industry.
Well, it's interesting that Paul Volcker is being used as an 80-year-old tease. I expect him to see him up in the red light district of Paris outside one of those sex shops. Paul Volcker, come on in. It's all fun you can possibly have. And then when you get inside, it's nothing but the same old wretched economic policies.
And the other headline that we predicted only last week was banks bet Greece defaults on debt they helped hide. Mm-hmm. So bets by some of the same banks that helped Greece hide their debts and has thus caused the crisis that is now ongoing are actually helping push the country closer to the edge of default because they are the biggest buyers and participators in the credit default swap market that is now going on. And the article focuses on Market Group of London, a small company backed by Goldman Sachs, JP Morgan, and a handful of other banks. So in September of last year, this bank introduced the iTraxx SOVX Western Europe Index, which is based on credit default swaps, and let traders gamble on Greece shortly before the crisis began in Greece.
Yes, well, it's a very neat package, isn't it? The Goldman Sachs bankers, they lend this money to Greece. They create these structured products for Greece, and knowing very well that they're faulty, that they're tainted merchandise, it's like selling them a car that they know is going to explode. And then they make bets that the car is going to explode. So there's no way they can possibly lose. That's not really a stock. That's not a stock market. That's a mafia model. That's kneecapping.
Well, it's similar to what happened to AIG. AIG got caught into a loop of it became more and more expensive for them to issue debt because of these credit default swaps rising. They're talking about the fact that Greece is now caught in this spiral as well because the people who hold their bonds are more concerned now that they see the price rising that their own debt is going to default, so they don't want to buy any more. So it becomes a vicious circle.
Oh, just a quick prediction now, since all of my predictions have been proven to be incredibly accurate. Within the next couple of months, you're going to see the introduction of box office futures contracts by Cantor Fitzgerald. I predict that within 18 months, these will explode in an unholy, ungodly mess of bubble economics.
So, well, back to the financial crisis and the sovereign debt crisis happening. Everybody is focusing on Goldman, and Goldman has been in the news. Goldman Sachs has been in the news in the last few weeks because of their involvement in helping Greece hide their debt. Now, the headline reads, Goldman is unpopular because it brings envy, Corzine says. Now, take a look at this clip.
We're so glad you're with us here in the studio, Governor, to talk about, among other things, Goldman Sachs. This is quickly becoming the most vilified financial brand in history. Why?
Well, when you're successful, it brings envy and all of those other things that are fairly human. And then when you make an occasional mistake in public,
mistakes in public he later then refers to as being these credit default swaps that were sold to Greece. So he's calling them mistakes, and that anybody who is envious, anybody who complains about the profits that Goldman has made is just envious, which is the very classic use of the word in America to silence dissent against any banking fraud.
Right. Well, Corzine comes out of the Goldman Sachs evil bastion of no good doers, the evil empire of...
He's the former governor of New Jersey and the former co-CEO of Goldman Sachs.
Yeah, so they have that mentality of doing God's work, and so they don't ever see themselves as doing wrong. So this is what makes them, this is characteristic of terrorists, financial terrorists. They'll blow up Greece, they'll blow up the economy, they'll blow up workers and savings, but they think they're doing God's work. So Corzine is a financial terrorist. He does much more damage than Al-Qaeda has ever or will ever do. Goldman Sachs is much worse than Al-Qaeda, much, much worse.
Well, regarding these credit default swaps that were used to mask the debt of Greece, here's a headline: Italy masked finances worse than Greece. Pangolas. So this is Theodoros Pangolas, who is the Deputy Prime Minister of Greece, and he was interviewed on the BBC in the last few days, and he said that that everybody was doing it. Italy did it worse than us, so people should go after them. And then he said, but by the way, you know, the Germans should stop complaining about it because they took away the Greek gold that was at the Bank of Greece. They took away the Greek money, and they never gave it back. So he's saying that the Nazis owe them money, and so that the Germans, quote, should not complain so much about stealing and not being very specific about economic dealings.
Well, the Bundesbank does have a lot of gold. And, you know, the history of that acquisition is checkered, to say the least. But Greece, they are like kids now, going to the gold vigilantes and saying, well, you know, all the other countries cheated on their exams and the requirements necessary to join the euro. Why are you picking on us? Mom, Dad, of the gold vigilantes, everybody's doing it. But of course, the gold vigilantes, including China, are saying, ooh la, this price is going higher in the gold bullion market.
But this, however, draws the next headline: Greek rescue in danger as Deputy Prime Minister attacks Nazi Germany. Now, the article points out that...
Again with the Nazis?
No, because of the story I just told you about, where the Deputy Prime Minister had complained about the Nazis.
Okay.
So this article is saying that it's now, they're saying that one banker said the situation has now become surreal. He said, because how can you call the Germans incompetent Nazis and still expect a bailout from them?
Well, because of the transfer of gold to the Bundesbank. So, I mean, if you look over a 60-year period of time, they have a good argument. If you want to look over the period of time of the introduction of the euro, then, and you want to believe in the neoliberal, Milton Friedman-esque kind of Harry Potter approach to economics, that you can wave a magic wand and suddenly, using debt and Keynesian economics, you can grow an economy, then no, it doesn't make any sense. But if you want to look at the real situation, well, yeah, of course, that gold is missing and it is owed to the Greek people.
It takes me to my next headline. We must arm ourselves for class war. And this is The Telegraph, which is a UK publication, which is really, it's conservative, it's considered a Tory paper and a paper for the wealthy. The column by Edmund Conway is arguing that the Tories need to get a policy to deal with the wealth and income gap that has arisen and sharpened under this global financial collapse. Now, it's a financial collapse that is being likened to the Great Depression. And during the Great Depression, actually the wealth and income gap closed.
That's right.
It had risen to, out into the stratosphere before the crash. Then the crash closed it. It actually has widened during this financial crisis. So he's saying you need to prepare for a class war.
Right.
And we see that in Greece, because we have a headline that 8 billion euros, by some accounts, over 25% of deposits in the banks in Greece has disappeared. So the wealthy are pulling out their money, 8 billion euros, 25% of Greece's private bank deposits have left the country, mostly to Cyprus.
I've got one word for you: Argentina. So the Tories are going to be the ones to bring about class equality in Britain. Wow. When are they going to adopt the punk rock version of God Save the Queen by Sid Vicious as a new national anthem? That has about as much chance as David Cameron bringing back class equality to Britain.
Well, they're fishing around for whatever they can find. So you know, while we have all these crises going on in Europe, we can't forget about the U.S. Here's my headline.
The what?
The United States of America.
Oh, they're still around, are they?
Ferguson, we're one downgrade away from the end of American empire. So this is Neil Ferguson, the famous historian at Harvard, who has written extensively about the collapse of empires. And he's saying that, in fact, empires don't collapse as gradually as you think. It actually comes rather quite suddenly. And you could see that in the U.S., he's saying. And it's because of the large deficits, because of the policies that are the fiscal policies, that we could see a sudden collapse of America.
Well, I saw some news just in the last day that organizers are putting together a march on Washington of gun owners. I think they're calling it the Million Gun March. So it sounds like a recipe for volatility when you've got a million disenfranchised, disaffected, poor, starving Americans with guns marching to the White House. It doesn't sound like a picnic situation one might find on the old Ozzie and Harriet show. No, no, no.
And so finally I have this headline, U.S. workers unlikely to go way of Greece. So this is what do you think the situation will turn out to be in America? Will the ballooning deficits, troubled banks, budget cuts, wage freezes, all of these in a basket full of other economic woes fuel the general strike in Europe and Greece? But these same conditions are unlikely to happen in the U.S. And they say the reason why they give in this article is that America people don't participate in unions, and those who are unionized tend to be public workers. 34% of the public sector is unionized. And they are, according to the article, prospering.
This started with Reagan. They held out this false promise, you don't need to join a union. Remember, he fired all the air traffic controllers. He said, unions are bad, the stock market's good. And then after the wealthy took most of the wealth after 25 years, they dropped the stock market down to levels where most of America are now suffering this huge wealth and income gap. So it was a huge bait and switch. And now they don't have the unions to fight back against the oligarchs and the banking mafia. But they do have a lot of really cheap and fattening donuts. Okay, that's going to do it for this portion of the show. Thank you so much, Stacy Herbert.
Thank you, Max.
Don't go away. There's more.
Every month, we give you the future. We help you understand how we'll get there and what tomorrow will bring. The best in science and technology from across Russia and around the world. Join us for Technology Update on RT.
All right, welcome back to the show. Now we've got a special treat for you. Kevin Connor, co-founder of LittleSis.org, recently launched on the web and quickly becoming a must-to-go site, LittleSis.org, a site that calls itself, quote, involuntary Facebook of powerful Americans, collaboratively edited and maintained by the audience. Before founding Little Sis, Kevin was a researcher at United Healthcare Workers East. Welcome to the show, Kevin.
Thanks, Max. Thanks for having me on.
All righty. Kevin, you were one of the first to write about certain individuals profiting from Goldman Sachs' role in the Greek debt crisis. Describe Goldman's role and which individuals were profiting.
Well, basically, I raised the question about what Goldman Sachs was doing in Greece. There have been reports in the media that it was helping hide parts of Greece's debt. And I asked the question, was Goldman also speculating against Greek debt at the same time? There have been various rumors in the market that Goldman Sachs was doing this. But what really raised my suspicions was that John Paulson has been reported by the Greek media to be operating in Greece, maintaining a team of 20 to 30 traders who are focused on the Greek situation. The Financial Times reported that Paulson was recently in Greece on a client visit, and guess who his tour guide was? It was actually Goldman Sachs. Paulson not to be confused with Hank Paulson, the Treasury Secretary of the United States prior to Tim Geithner during the Bush administration. John Paulson was the hedge fund manager, famous for making massive bets against the subprime market. He reaped billions from what has been called the greatest trade ever. I would call it probably the most corrupt, possibly the most fraudulent deal in the history of Wall Street. Essentially, Paulson and Goldman worked together to devise securities that were designed to fail. Paulson handpicked mortgage pools for inclusions in complex CDO bets that Goldman packaged and then sold off to investors. That investor turned out to be AIG and others who we don't know. AIG, of course, was bailed out by the U.S. government after it failed under the weight of these obligations. So basically, I call this the same vulture flight pattern that I saw surrounding the AIG deal, which really hasn't gotten much scrutiny. Goldman Sachs and John Paulson were both supposed superstars of the subprime fiasco, where they actually called in their bets at the right time. But actually, the way these trades were devised was extraordinarily corrupt. So in the case of Greece, the real question is, was Goldman, at the same time that it was helping Greece hide elements of its debt, was it working with Paulson to speculate against these bets? The New York Times is actually reporting today that banks, including Goldman Sachs, backed a company which set up an index in September that helped financial institutions bet against Greek debt, bet on the likelihood of Greek debt in what are largely opaque markets, in what's called sovereign CDS. The company called Market actually also set up a similar index on subprime trades in 2005 and 2006. The similarities here are remarkable. Goldman Sachs and Paulson are essentially stuffing carcasses like AIG, like Dubai, full of debt. The situation explodes. They swoop in for the kill, reap enormous profits, hold a gun to the heads of policymakers who then call in the bailout. And if this isn't a conspiracy, then I don't know what it is.
Right. It's kind of like reverse drug dealing. They take really bad cut or a baby laxative, and to sell it to folks, they add U.S. AAA-rated government bonds and say the whole thing is bona fide AAA quality cocaine, when it's actually just all 99.9% baby laxative. And the result is about what you'd expect from selling financial baby laxative to these economies. They're having huge deflationary diarrhea, and the economies are collapsing. And the workers, of course, are getting blamed for the very things that were foisted upon them by Goldman Sachs. And it's not unusual to assume that Goldman Sachs is making these types of fraudulent bets because they have a track record now. Wherever they go, they sell these fraudulent paper to these countries or these companies or pension funds, and then they simultaneously make bets knowing that they just sold a pig in a poke. They just sold garbage, and they're making bets that this will turn out to be garbage. Let's try to understand why in the U.S. this isn't getting any coverage. Why are in the U.S. How is it able to pass this stinking pile of dog poo underneath the noses of Americans? How are they able to do that?
Well, the answer is a complacent and compromised financial press and larger media structure, political structure that has been captured by institutions like Goldman Sachs. This is really what my website, littlesis.org, is about. It's the fact that there is this revolving door between political institutions and institutions like Goldman Sachs, JP Morgan, and other powerful corporate institutions. We have a list on the website that shows just how many Goldman Sachs officials have entered government, but it's also the case with many other powerful institutions. And there's also a sort of ethos in the media where rather than do the hard work of digging through data and also trusting critical instincts, there's a certain respect given to powerful people and wealthy people who are supposedly very savvy, as our president recently called them, rather than a critical understanding of how these players operate, how they come to their wealth and power, and it's really something that we need to focus more attention on. Really a lack of the sort of intensive watchdog journalism that is needed to keep these people honest and build critical narratives rather than ones that worship the wealth of people like John Paulson. This wasn't the greatest trade ever, as I said. The trade he made with AIG is possibly one of the most corrupt and fraudulent and hasn't gotten any of the attention it deserves. These people own our media institutions and our media narratives.
Yeah, well, Obama, if he plays his cards right, in 3 years' time, he can get a job at Goldman Sachs, too. And I think the point about John Paulson is a good one. It's not that he's making money because he's smart. He's trading on inside information. Let's be honest. Let's lay the cards out on the table. If you know all the buyers and all the sellers, and you have perfect visibility of the market, and you're colluding with the government, who's supposed to be regulating these funds and these activities, and you're making bets accordingly, that's inside information. So let's talk about something you've launched on littlesis.org, investigating the bubble barons. Great new feature. Tell us about it.
So basically, the Bubble Barons, it's a research project launched in partnership with Alternet. It's getting underway on littlesis.org just as of yesterday. We're looking at American multi-billionaires, Americans with net worth of over $2 billion or more, who saw, in many cases, astronomical gains during the housing bubble. Whether they were on the short side or the long side, many of them are still doing quite well right now. We're basically investigating their networks, looking at their key relationships, looking at how they made their money, and also where it's going. Where are they investing it? Where are they spending it charitably, politically? What cultural institutions are they supporting? Who are their spouses? Who are their family members, friends, closest business partners? And I think we want to develop a picture of the American super rich so that we can really illuminate how they've profited from the boom-bust cycle of the past decade, or much more, actually. When many American cities and communities are bombed out economic shells right now, how have these people been able to maintain such extraordinary wealth? We're getting to the bottom of that, and we've enlisted a group of 150 citizen journalists who came to the site through Alternet, who are adopting each of these bubble barons. There are 67 of them right now, though the list is subject to change. They're adopting the bubble barons and basically digging really deep on everyone from John Paulson to George Soros to, Julian Robertson.
Right. Another hedge fund manager. So now the robber barons, as they were called, going back in time, the Carnegies and the Mellons, they built museums and libraries, and they try to give something back. And a lot of it has to do with avoiding being burned at the stake, a bit of a public relations move. But are the bubble barons doing any of this PR moves, or are they confident that they can build up the walls, these apartheid walls we see springing up in various so-called allies of America? Are they going to insulate themselves enough to prevent them from having to spend any money on philanthropy whatsoever?
Well, it's interesting you bring up insulating themselves, because that's part of the reason I deem them the bubble barons, not only because they're making money from the housing bubble or the dot-com bubble or whatever bubble they devise next, but also because they've insulated themselves from their economic crimes. As for whether they are making charitable contributions and building museums and that sort of thing, it's certainly happening. Bloomberg, for instance, Mayor Bloomberg, who is on the list and someone who saw extraordinary gains during the past 10 years, has a foundation that will give away much of his wealth to public health and other social causes. But this wealth, even as they donate it, is pushing a certain bubble baron agenda, if you will, and really we want to get to the bottom of that. What is that agenda, even in the form of charitable contributions and also political contributions? What is their vision for America?
Yeah. I mean, the Bloomberg, of course, is matching his philanthropy with his political career, and political career opens doors for yet more wealth aggregation. So for a guy like Bloomberg, it becomes a cost of doing business. For a guy like Bill Gates, his gallivanting around the world for vaccination, of course, he won't address one of the fundamental key issues, which is intellectual property rights.
Right.
So let's go to the U.S. recovery in the financial system. Any positive changes coming?
In terms of American recovery, I don't, the way things are going right now, I don't see many positive signs. A $15 billion jobs bill is just a paltry amount. Recently, the Obama administration named two co-chairs of the Social Security Commission, one of whom is a steadfast opponent of Social Security. It's a social safety net that is extraordinarily popular and necessary for the livelihoods of Americans. I don't see much vision in leadership at the top. Internationally, in Greece yesterday, public sector unions and private sector unions and many Greeks did stand up to the banksters and their policies.
Kevin Conner from littlesis.org. That's all the time for we have. Thanks for being on the Keiser Report.
Thanks, Max. Really appreciate it.
All right, and that's going to do it for this edition of the Keiser Report. I want to thank my guests, Kevin Conner and Stacy Herbert. If you want to send me an email, please do so at keiserreport@rttv.ru. Until next time, this is Max Keiser saying bye, y'all.